Good morning and good day. It's Friday, 1st of June 2018. Welcome like every business day to Real-Time Daily Trading Ideas. We have 5 days a week, 5 different traders. We will speak about trading ideas, strategies, market screening, maybe 1 or 2 questions from your side directly answered in our webinar. Our goal is quick and smart, but for the daily, so let's have a nice start like every day. And like every day, we will start with our risk disclaimer. Forex and CFDs are leveraged products and can result in losses that exceed your deposits. If you're a starter, please start with a demo account and make yourself familiar with long trading, short trading, leverage trading, and your personal risk management. If you'd like to read the full risk disclaimer, just visit one of our web pages, for example, admiralmarkets.com, and you will find everything written down there. This is me. My name is Jens. I'm the German guy. I'm talking from the Berlin office from Admiral Markets. We are a big international broker with over 18 country offices. So my English made in Germany, but hopefully some of my quality too. But like I say every day, I'm not the main speaker. The main speaker is the day trader of today. This is our scheme. On Monday, it's Jay's day. On Tuesday, it's Paul's day. On Wednesday, it's Giancarlo's day. I see right now this is an outdated file because we have a new speaker on Thursday. On Thursday, it's usually Marco's day. And on Friday, it's Dirk's day, our leading day traders live every business day to the same time. And of course, if you'd like to trade Forex and CFDs, you will get many benefits only with us. For example, DAX 30 CFD, one of our bestseller, typical spread of just 0.8 points to the main trading hours. If you check out our actual spreads of euro-dollar, also there you will find really, really low spreads. Right now, average spread, typical spread in euro-dollar, just 0.8 points, all without any additional commission. Check all the details out on admiralmarkets.com. And of course, you will find also on our web pages something about our regulatory background and how to contact us. You can call us, you can send us email, or visit YouTube or Facebook, or the other channels linked to admiralmarkets.com. Check them out. And now it's time for Dirk, our day trader of today. Hi, good morning, Dirk. What's your view to the markets today?
Yeah, good morning, Jens. Let's see if that screen is going to be transmitted. Yes, we will be starting right now. So hopefully the sound is clear. We will be starting with a short view on the German DAX. What happened? What the hell happened the last days? If you have a look at some really movements from a couple of stocks. So first of all, the story about the German banks, and of course the story about Deutsche Bank. Right now, this morning, it looks like that might be a little bit of a relief, but it's still in negative territory. Let's see. No, on the Xetra version, it's not in negative territory. It's hovering up 3.73%. But actually, what is happening right here? Actually, there's a reason that the market might be a little bit of going back up again, because reminder for you, go to the economical calendar and check the data. For example, today there will be an important news coming up. It's the Friday's jobs report. So that's the May jobs report from the United States. So a couple of news like non-farm payrolls, like private payrolls or unemployment rate, average hourly earnings and stuff like that are coming up. This is due for 14:30 CET, and important for us is to have a look on a couple of trade possibilities around the US markets, as well as the DAX, and for example, like this move in gold, like I entered this morning already. As you can see here on the platform in the terminal, there's a gold trade. We will be talking about that in a couple of minutes. First of all, have a look at we will have a look at the projections for the non-farm payrolls today. So what could happen? Non-farm payrolls are about to maybe come in around 200K. So that means 200,000 new payrolls coming up possibly for May. That's the consensus projection, and the unemployment rate might even drop to 3.8%. So it might be interesting on top of that to have a look at the average hourly earnings and weekly hours, just because of the wage inflation. So everything is set to be having a look on what is going on with the inflation numbers, because the Federal Reserve is about to maybe hike in another session to hike the rate in getting more closer to the 2% marker and even hiking it later the year again and again. So that might be interesting to have a look on that one. If that is really coming out weak, so something like 150 new payrolls, so that might be something like it is a sign for the market, oh, the Federal Reserve might be a little bit or more on hold, and that might be helping the market. So that might be helping the market to bring it a little bit more up. In contradiction, you might maybe you saw that yesterday, and you read a lot about those tariffs who got implemented by Mr. Trump and his government. It's a couple of trade tariffs are now effective for Canada, for Mexico, and the European Union, and all this stuff is about maybe to escalate into a trade war, into a trade conflict again. Remember, it's going to be summer soon, and the less information, the less actions are transmitted via medias, the more a topic like a trade war, trade conflict is brought up by news agencies, and just to construct a little bit of confusion and even and to contradict to a couple of trade setups. So this Italy crisis stuff is a little bit off the road right now because they almost made it to form a new government. We will be seeing that what will be happening in the next week when the first people appear, and the first reactions, and the first maybe the first shows from those new Italian members are coming up. We will be seeing that, and we'll be covering that. Just a thing about the other thing about North Korea with Kim, we will skip that topic because right now it is really, really covered and really blocked by all this NAFTA and Europe trade tariff stuff. So, what is going on with the DAX? For example, we see the daily chart right here, and I mark that with a blue trading box. As I already spoke about that on Tuesday, this was Tuesday where I replaced Paul for 1 day because he was off or sick, whatever. And that's what I spoke about this trading box, that we will be seeing some kind of a holding at this 61.8 level. We see that here, the 61.8 Fibonacci retracement, which is from the last low up to this last high here at 13.204 if we're talking about this etc. numbers. So the next reactions could be a little bit of a relief today into the non-farm payrolls, and of course we are not Merlin, we can't look into the future what will be happening directly at 14:30 CET, but we might be getting prepared with a couple of pending orders to be on the short side, and with at the other side with the help of the trading mask here at MetaTrader, maybe with a pending order to be prepared for a long scenario as well. So that depends what kind of time frame you are trading. So if you are trading at the 4-hour or daily setup, you might be interested in having a short setup when the market is running up again in direction to the 12,800 number. So that might be another short opportunity. If we look at this scenario, we might drop back to this 12,620s level where the 61.8 is, and dropping down to the next line in direction 50% right here to 12,500, 12,450s. So that might be another setup, a possible setup. We will be having a look at the gold chart right now, because this gold trade is still running. I took a stop loss level at 12.8859. Why is it 12.8859? It's nothing like in the direction of some kind of support from the pivots or from Fibonacci's. It's just the reason that's just $10 stop loss. It's simply $10. Just give it a little bit of a smaller room, and just because it is a really small size, as you can see that one, that's a mini. you're not forced to trade with a maximum speed. You're not forced to drive 250 or 300 kilometers with a Porsche just because you have a Porsche. So you're also allowed to drive something like 130, and that's the same stuff like with a bigger account. If you're about to open a couple of positions or even plan to open another 2 or 3 positions, you might be thinking about doing a little bit of a slow version or small size. So it's not forbidden to trade a lot with a couple of small sizes like that. So the target of this one, the gold target, if we look at the daily chart, let's have a look at the 4-hour and just have a look at this, which I talked about at Tuesday already, and there is nothing changed so far, because this trade is set to have a target at this 38.2 projection, and this is a Fibonacci projection around the level of 1313, 1314. So if you place a take profit, like you see that one right here, if you place a take profit, you could place it a little bit underneath that Fibonacci retracement, just to be sure that it's maybe if it's not getting touched, not getting scratched, you might be getting in the direction of 1313 and going back down again. So you might be on the secure side to place it a little bit underneath that 38.2 level. The reason why I placed this gold long is simply the fact because all of these kind of tensions, as I spoke already about all the trade tariff stuff and possible Kim Jong-un Trump meeting, and on top of that Italy, and on top of that a couple of other things rolling up, that it might be getting interesting to be back in gold long again. So that's the only reason I'm placing this at the current level. If you look at this last low right here, you get a low of 1293. That might be an interesting low if you are about to enter this trade, like we do this here right now. You might be moving the stop loss scenario after a couple of minutes if the gold is running over that 23.6 level here. So that's around 1302, 1303. If it scratches that and is going up, you move the stop loss directly to the entry zone, so you're not risking anything. When the stop loss is moved already to the entry, it feels like, and it is something like a free trade. Of course, you have to pay attention about the financing costs if you are about to hold that trade overnight or over the weekend. So be sure if you want to do that. Things around a couple of other trade scenarios. If you look at the current EURUSD Dollar rate, let's see where is this one, and we already spoke about EURUSD Dollar rate on Tuesday with the same setup, and this one failed on Tuesday, scratched, it got killed at 115.27. So the low was on 115.10. So only 17 pips. Okay, 17 pips is a lot, but in fact, the idea was not even probably right. The idea was 100% right that the euro might get a relief rally, just because it's getting to the end of the month. Right now, today, the 1st of the month, the 1st of June, this is something different. But the last 2 days, this is typical rest of the month trades, and you can think about this big move from the beginning of May until today, that the EURUSD Dollar rate made a couple of 100 pips. So if you calculate that, it's approximately 600 pips of a move. So it might be getting interesting for some big traders to just take profits, just delete trades, just take them out, just to book a couple of winners. So that's probably the reason, because a lot of trades to the end of the month are simply just booked out just to book a couple of winners. Okay, just have a look. We will just have a look at the current pictures, even for the euro-US dollar rate, what is coming up in the news. Besides that non-farm payroll stuff at 14 CET, this morning you already probably read about a couple of PMIs. They have been published. For example, the important ones are the German ones and the one from the Eurozone. And if you look at the PMIs from the Eurozone May, which is finally at 55.5 points, and exactly where the forecast was. So nothing surprising, and the German one at 56.9, and it was forecasted at 56.8. So there's no big fundamental surprise. So that we might be hovering a little bit to the sidewards until this event of a non-farm payrolls is about to emerge. So what is possible? What is possible with the US dollar trade right here? We will be deleting this stuff here. Let's go to this objects list and just delete all the stuff, just to have a little bit of a naked chart. Going to the 4-hour chart, or even the 1 hour, closing that one here as well, just to have more room. And if you have a look at the current Fibonacci retracements on the 1 hour basis, you will be having that high, combining that one with the last low, and finding a couple of new setups where you might re-entry a long setup, or where you might be targeting when you are about to short that one right here. So if you are about to short that one, you might have the first target at that 61.8 level, which is at 116.42, and a couple of other interesting targets to the downside is that 38.2, which is around 115.90s, and of course that 115.60. The other way around, you have to pay attention to those projections to the upside. I will just use that black line here, horizontal line, to move that one to the first projection level at 138.2, where we already crossed the line of 118, so very close to that 118 level. And if you just move that one up to the 161.8 level, it's around 118.57. You might scratch your heads, is it really getting up there? Is there a relief rally in the euro-US dollar rate? Everything is possible. It just depends how bad these non-farm payroll numbers really are. If they are really bad, that might be weakening the US dollar in combination with the current trade tariff stuff, because internationally a couple of countries are now trying to fight back. This will be getting more escalations, and I'm not 100% sure if that is really good for the US dollar. Probably this will be something like a boomerang, maybe coming back to the US in a couple of months or even a year, and will cost them a couple of GDP points as well. So possibly we will be hovering around these 116.80s, 116.90s until non-farm payrolls. So be prepared, buckle up, and try to not to overdo, and just control your risk and money management, and of course pay attention to your size, your trading. All right. Just have a look at it's 11.18, Jens. Is there any question, something like a special market? I still have WTI oil on my list.
Yeah, one question in general, what type of pivot points are you using? Is it Camarilla or anything else? Could you explain that, please? What type of pivot points?
You will be checking the navigator, for example, here at the MetaTrader tool, and check that stuff up here, and you will see where is it? The Admiral pivot, and this is the one which is implemented at the MetaTrader platform. They are basically like pivots are calculated, automatically calculated at the London time. So the London time is a 0 point, and even all this rest of the question is something like really Chinese to me. I'm simply using that stuff because it makes sense and a couple of systems are using it. It's like Fibonacci. It's a little bit of self-fulfilling prophecy. The more the guys, the more the systems are using that, the more it works. That's the only reply I can give to that one. If that is enough for the question, of course. Okay, WTI, where is it? Now I closed that one. Be opening that again. WTI chart window, and we'll be deleting this one here just to have more room. This one as well, and have a look at the overall picture on the daily chart. And there's not a really big correction, if you can see that one. The bigger correction is the one here. So we will start having a analysis at these 2 points. Just widening that one, and just to be sure that we press the right lows. No, that's not the right low. That's the right low, where we see that we already tested and scratched at 161.8 level and going back down where we started at that 100 level, which is right now giving a little bit of support, still a little bit of a support. So what is going on with that oil stuff? Besides Brent, WTI is one of the most traded oil contracts at the NYMEX. And important to talk about is the current scheme, the OPEC scheme, because a couple of countries from the OPEC and in addition countries like Russia agreed to leave that OPEC reduction really untouched, and they will be they just committed to that one and said, okay, we will be leaving it untouched. Nothing will be happening. We will be it is very important that we stay at these levels, at these production levels. The thing about the US right now is that they are really one of the biggest producers of oil right now, even more than Saudi Arabia. On a daily basis, they are pumping up more than 10 million barrels a day. It's crazy. One barrel is 159 liters, as you may know, and just calculate that up, how much oil is being pumped out. Some US platforms, some US sources, and the worst scenario is right now that they have less refinery capacity. So the more they are pumping up, the more problems they occur where they would be storing all this kind of oil. So probably there will be something like a big market blip, and it's going to be crashing a couple of dollars back down to the 61.8 level, and this would be a perfect entry zone again. Let's see what this horizontal line is about right now here. That's properly around this 63.40s, 63.50s area. And this might be, as I always talked about, these trading boxes might be a nice rebound scenario for the oil contract, the WTI. The other trade idea besides that trading box, you always know if there is something about that this trading box is not getting reached. The next move to the upside back again to this 138.2 level is the next short scenario. So I won't be having the idea of having a long scenario right here. We'll be waiting a little bit of a patience. The market should come to your positions, to your entries. Just be a little bit more patient and prepare a couple of scenarios. And if the scenarios are really about to happen, then your pending orders get filled, and you just observe and decide if you take out the half of the position and move the stop loss to the entry zone as quick as possible, as fast as possible, and just collect some pips, some points, and some bucks. So it doesn't matter if you collect 100 or 200 or 500 or 1K dollars. It doesn't matter if you're about to collect 100 pips in the EURUSD dollar rate movement. All you have to do is just collecting every day. If you do that with 10 trades, okay. If you do that with 100 trades, okay. But you just need to collect and just to take the winners. One thing I forgot. This was another market we spoke about, especially because of Italy on Tuesday. And I told you that this thing is so overcooked, so overdone. there was this 61.8 level where we spoke about a possible short scenario right here. And as you can see, there was really a big, this Eurobond future just took a D ... I'm not allowed to speak these words. And really it is more than just calculated from a 160, almost 164 level down to sub 161.30s, scratching the 161 level. So more than 200-300 points. This is this is a huge movement. And be sure this is nothing like that the free market is doing itself. And if you have a look at, for example, if you are interested in looking at these guys, this stuff, have a look at Italian bonds. What happened there after the new government gets formed? Just check the Italy 2-year and 10-year runners. How much and how fast they moved downwards. You can be sure that no one out there, no big fund managers are running back to Italy again to just give them money and just investing in Italian bonds. There must be some kind of an institution called the ECB or whatever, which kind of institution is helping them to manage that, because it was too fast. The move was too fast. Okay, what is happening right now is that we will be having this retest level. As you can see, there's a 61.8 level here as well from another Fibonacci retracement setup analysis here. And this one is scratched right now. And if you have a couple of, let's say, reliefs in today's market, we will be retesting that level here, just marking that one with a shape again, with a trading box, where we will be re-longing or having a rebound trade here at this scenario. And this is exactly the, let's see, this is exactly the level around the 160.50. So this might be interesting to just wait, being patient, if that Eurobond future is scratching that 160.50s for a first try of a rebound trade. And this one has the possible target at this 61.8 level here, 161.72.
Every analysis is great, but the time is our limit. Like every day, it's already 27 minutes. So of course, 1 minute I can give to you, but I have to say already thanks and goodbye. Tomorrow is another day, but tomorrow it's Saturday, it's weekend. So I wish you all the best and a happy weekend. And we hear us again on Monday. On Monday, the day trader of the day is Jay Medwo, more for the institutional view of the Forex industry. Thanks again. Greetings from Berlin office. In the last 1 minute or 30 seconds, bye, Dirk.
Yeah, I'll try to do that in a really short term. If you have a look at the market news, besides all this tariffs, besides Italy, besides trade tariffs against Europe and stuff like that, and the Deutsche Bank share, for example, have a look at Spain. Please just observe what is going on right there. There's another crisis, another stuff cooking up. They are right now having a confidence vote against Mr. Rajoy in Madrid. And it looks like he's being off duty in a couple of minutes or hours, and they need to be forming a new government, and new whatever will be happening in the next hours and days in Spain. So have that on the cards. Maybe there's another kind of a crisis on the cards for a couple of trades. Maybe that Eurobond future is interesting in the next hours, just because of this topic as well. Have a great weekend. Hopefully a sunny weekend, and if you like, you'll be hearing us again at Friday 11 CT. Thank you. Bye.